In this video, I am going to cover the 3 things that I feel you need to have in order to be a successful stock trader. Hello stock traders, I hope all of you are having a fantastic day. Before we get started though, if you could please do me a favor and hit that most amazing and wonderful like button. Also, if you're seeing this video for the first time and you like this type of content, consider subscribing and turn on those bell notifications so you get notified when one of these videos comes out. In my experience, successful stock traders have these 3 qualities. Number 1 is strategy. Number 2 is discipline. And number 3 is risk management. Let's start with strategy. Strategy is the most important thing that you need in order to be successful trading stocks. The strategies in your playbook are essential. Any strategy has a win rate. It is not only important to come up with a valid strategy, but you need to track your trades within that strategy so that you have a win rate and an average gain per stock play. I track all of my trades by strategy with an average win rate per pick. This helps me to make tweaks and make changes to my strategy. Some of these strategies take years to develop. For example, I have my golden strategy, and with this strategy, I can only use it when the SPY is either in wave 1, 3, or 5 of the Elliott wave. I have tracked it during other times, waves 2 and 4, and also during corrections, and I have never done well with that strategy when the SPY has been in correction. I only got to that conclusion by evaluating my strategy and tracking my trades. I have many strategies to choose from, and I never invest in a stock pick unless it fits my strategy. It has to fit all parts of the strategy, and it's so important that if it doesn't, that you skip that particular stock play. Any good strategy that you are using in the stock market, you need to have a clear entry point and exit point plan. The second thing you need and have to have is discipline. Discipline forms the cornerstone of your investment strategy. It is the ability to stick to your plan and stick to your trading strategy. For example, with any good strategy, you have a set of rules to follow. In all of the strategies in my playbook, all of them have specific rules for each and every strategy. Any stock that I'm looking at has to fit all of those rules of things that I'm looking for in a stock. Otherwise, you have to have the discipline to skip it. For example, my dividend strategy is long-term, and I only look for stocks that are in the Dividend Champions list. If it's not on that list, I do not choose it. Another rule of that strategy is to hold for a very long time. I only sell if that company lowers its dividend payout. It could be so easy to see this dividend stock paying this 31% dividend yield. But that type of pick would not fit that strategy, and so I cannot choose it. You have to have the discipline to stick to your strategies. You have to train yourself to not get emotional. Those rules help to keep you from getting emotional in the stock market and suffering from FOMO. Warren Buffett says the stock market is a device for transferring money from the impatient to the patient. I would go further and say that the stock market is a device for transferring money from those who don't have discipline to those that do. Number 3 is risk management. Risk management is the process of identifying and assessing the risk and developing a plan to minimize that risk. For example, call options when holding for a long time can be very risky. As a way to control my risk, and my risk management plan is that I only use 1% of my portfolio for that type of investment strategy. The reason is because options can go to 0, and if it goes to 0, I want to be down only 1% of my total portfolio. But then the option still has so much upside and upside potential that it can still make a difference in my portfolio with only 1% invested. Another way a lot of investors control their risk is by setting stop losses. When choosing a stop loss, I like to set it 3% below a previous level of resistance. So I go back on the chart, look at the resistance, and I will set that stop loss at 3% below that level. Risk management is simply having a plan of what you are going to do if that stock turns against you. In the stock market, you'll never be 100% right, so you have to have a plan for what to do. For example, last year at a stock I was up 25% in and I did not set a stop loss. This was a PDUFA run-up play that had extremely bad news happen to it. It was ticker symbol ZSAN, and those in my group remember this if they were members last year. Anyway, the FDA rejected their drug and the stock dropped like crazy. I was able to get out of it for 50% loss, but there were lots of people who held even further than that. It dropped very fast, and if I would have had a stop loss set up, that would have protected me so much better. In fact, if I would have had the normal stop loss set up that I would have chosen, then I would have had a 6% gain on that particular position. You are not always going to win in the stock market. At some point, you're gonna pick bad stocks, and the secret to making money is to minimize your risk in those situations. If you are looking for proven stock strategies, then please check out our Patreon group. We have a link in the description down below. Our basic level is only $27 a month, and there are a lot of fantastic strategies within that. In our standard level, we have professional traders that can help you along the way. Everything from options trading all the way to long-term swings and penny stocks. And in our premium room, you get to see my entire portfolio, and there are also lots of other benefits from having that level. Anyway, please check it out in the description down below. We hope to see you there. I appreciate all of you who watch on YouTube and all of you who subscribe. And of course, I appreciate all of those who support me through Patreon and our group. I wish all of you the best on the stock market. Now let's go make some money, and Raythoven out.